Alright, welcome. This is Para, and this video is going to be on daily bias, and I'm going to take you over the easiest way to find daily bias. Before we start, let me draw a few things here. One thing about my videos, there's not going to be any editing. It's just going to be pure information. And quite frankly, I do not script my videos. I just record them because I already know what I'm going to say. Anyway, this is a daily candle. This daily strategy, or this method to find bias, takes place on the daily candle. So we go on the daily charts and we pay attention to the highs and lows, and the body / candle closes of a daily candle. Assuming today is Tuesday, and this here is previous day's candle, Monday. And the next daily candle opens here, right? And it does something like this. Let me draw this. We have a huge wick right here. This is a red candle, so the next day after this green day was a red day. And a little wick here. We can see in this scenario, we did not get a close above this daily candle here. So in other words, we closed with a wick and failed to body close above the previous day's high. We did not close with a body, we closed with a wick. What does this tell us? It means that price around this level was resisted and it's weak. So where is our next strong liquidity? This low. Sorry, I just lost everything. If I can find it here. So our new drawn liquidity will be this low and this low right here. Now let's assume the next daily candle opens here, trades here. We have a small wick here. Just a little bigger there. And another wick here. We can see that we closed below previous day's lows right here. We closed with a body. So where is our next draw on liquidity? Down here. Now let's assume that we open with a candle like this. This candle is going to be green, but this is yellow, this is not green. Something like this. And we sweep this and close like this. We failed to close below the wick with a body. We closed with a wick. Therefore, price is not weak enough to close below here. It lacks bearish strength. So our next drawn liquidity becomes this right there. Now, this is the entire idea behind this. Let's get on FX Replay, and we're going to backtest this and see how it can be used on the charts. So now that we are at FX Replay, let's get started with the same idea. Pretty simple. First, I'm going to move this up here and let's mix this there. Let's go to the next day. So we can see here, let's zoom in a little so it's easier to see. Here, we closed above these daily highs right there with a body. Where is our next strong liquidity? Right here. And we take that. Next day, takes both sides, closes with a wick, and also sweeps this low. So we have almost no bias here. Why? Because we can see both sides are swept, and we have a big range. I will mark this here if the magnet works. I won't mark this here, but this is a low probability day. As I said, nothing. Once again, we're waiting for bias. We have two equal highs right there, and also we have a high right here. Another accumulation day. All right, we get a sweep of this low, and we sweep this liquidity here, and we close above. So our targets would be here. Once again, looking at the same bias. Now we have a more clear bias, way more clear. We sweep this low, close above. So where is our drawn liquidity? Here. And that gets swept. And as we can see, accumulation, manipulation, distribution, the power of 3. Now, where is our drawn liquidity? After we can see here, close above the high here, our drawn liquidity will be up here, which gets swept. See what the next candle does? We can see once again, our drawn liquidity is hit right there. See what this day does? Closes with a body, but it is bearish. Our drawn liquidity is here, which gets hit. After this is swept, we see our drawn liquidity is up here. Why? We close with a wick down there, and it runs over here. Bearish close, but we did body close above this. But since the close is so bearish, we can assume that we run for these lows here. And as I said, we run for the lows. Wick close, the lows here swept. Our target could be up there. Delete these two here. You can see we swept this. Body close, changing our bias to this low, which is swept. Well, we still have these highs in mind. Body close, bullish. So our drawn liquidity is up here around this level. Can we reach for that? Nope, we don't. Instead, we sweep this high, which is the correct drawn liquidity. If I remove these, we can see Monday gave us a body close on Friday's highs. Therefore, Monday's highs are targeted by Tuesday, which then runs lower. Now you have to take other things into account, such as SMT. This could have been an SMT that caused the stand move and made these highs stay untouched. Before we continue, let me real quick light up a cigarette. Let's get going. But here, with close, target would be this low right here, which gets swept. Next day, see what this day does. There's a little gap here. So we're going to mark these both sides to find more bias. Body close up there. So our drawn liquidity is up here and up here. We also tapped into this daily gap right here. Let me just make this better. There. This little box, this little fair value gap. Therefore, we can expect price to go for this high. As we can see, that's what it aims for. Going to delete everything. Body close above here. So our targets would be these highs here. We don't reach for them yet. Inside candle, Monday. Let's see what Tuesday does. Again, inside candle. And we finally sweep them. Closes outside, right here. So, where is our bias? That's high. We have equal lows here. Keep those in mind. We sweep the high. Wick close, so I will be targeting this. And FX replay does not want to let me back this anymore. So let's go back on real charts and we can see this once again. So we are back on TradingView. Let's go back as far as we can. This is around 2019. And let's get started right here. So body close below this right here. Zoom in a bit so it's clear to see. I'm going to try to make my lines bigger so that you can see them. There. Therefore, this is our drawn liquidity, gets swept, and then we have a wick close above this low. We don't close with our body. So our bias is bullish, targeting where? Previous day's highs or these highs here, which we all run into. Once again, after this, we can see we body closed above previous day's highs. Where is our drawn liquidity? This high here. After that, we can see we close with a wick. So where is our drawn liquidity? Right here. And then we close with a wick. So where is our drawn liquidity? Right here, which doesn't get swept. Instead, we have an we have a accumulation day. Until this day, we close here. After we get this close with a body, where is our drawn liquidity? Right here, which then runs up. After this close, body close above the previous day's highs. Where is our drawn liquidity? Up here, which gets swept. Body close once again, which makes our drawn liquidity up here. Wick close, which makes our drawn liquidity down here. So on and so forth. We can repeat this forever. This is the easiest way to get daily bias. It works almost any time on any pair. I'm going to continue this for a few more minutes just so you understand. Close with a wick, target the low, body close. Our drawn liquidity is here. Inside day, when there's an inside day, we wait for more bias. We sweep this low, and we body close above the high. Our drawn liquidity is up here. Close with a wick, so our targets are over here. Close with a wick, our targets are over here. Close with a body, our targets are here. Wick close down here, body close down here, and then we sweep this. We sweep these low with a wick. Where is my target? Over here. And then down here, and then we can see we close with a wick. So under this high, and then we close with a body, so this high, and so on and so forth. It's this easy. Just like this, you can figure out bias. Adding this gives you a good, it acts as a confluence, and it helps with your daily bias a lot. This is the easiest, most simplest way to find daily bias as a student of ICT. It all comes down to time-based liquidity and candle closes. Wicks do the damage, bodies tell the story. Right? The wicks did the damage here. Down here they did the damage. But look at the body, closed right above. The wicks did the damage, the body tells the story. Runs up. So, time-based liquidity plus bullish LC. What is time-based liquidity? Later on I will make a video on that, but all you need to understand now is that previous day's lows and highs have liquidity and are important. Because imagine this, you're in a trading center and you hear an alarm ring well, and it says that, for example, Bitcoin has crossed the lowest price of yesterday. So the lowest price of yesterday was 68,000, for example. Today it's 67,000. It's cheaper than yesterday. Do you understand what I mean? Therefore, it acts as a discount / premium level for buyers and sellers to get into the market. That's why it is very important, and that's why this works so perfectly. You can run this forever, and it will act perfectly. Let's jump randomly into here. Randomly, very randomly. This candle right here. Wick close targets the highs. Close with a wick again, targeting the lows. Accumulation, sweeps the lows. Wick close, targeting the high. High gets hit, so on and so forth. It happens all the time. I hope this video helped. If it did, if you want, leave a subscribe. If not, leave a like. And yeah, I hope I see you in the next one.